first of all, very happy Diwali to all of you. Okay, and let's get started. So first of all, let me introduce myself. This is Utsav Shah. I'm working with Spiders since last few years. So let's get started. So as per our today's topic, it's about how to make strategies like professionals using the Spider 5.0. Okay, there is some small differentiation between normal ordinary traders and the professional traders. The only difference between two of them is professional traders have a certain kind of system built in them. Okay, they build a certain kind of system, whereas ordinary traders don't have a system. They have the strategy, but they don't have a system. Okay, over here a system is means not just strategy but a complete set of plan where a person knows where to enter, what would be my stop loss, when to exit, what kind of exit strategy I may use. Okay, and a certain kind of set of guidelines and that helps a person to stay disciplined. Okay, I have happened to meet many professional traders, very successful professional traders who happen to successful in their trades. In every time they enter. Okay, it's not that they don't make losses. They make losses, but the losses are low and the profits are higher. Because of that, they are earning so much. Okay, let us get into what is the difference between a pro and an ordinary trader. So the first, the major difference, okay, is the systematic trading. Okay, systematic trading is basically is a very precise view. Because nowadays you are not just uh, fighting with the normal traders, but you are fighting with machines as well. Okay, so basically if I say there are many algo traders has been formed. Okay, and the algos have already a set systems, like they know where to enter, where exit, where the stop loss is. Okay, so to fight with them we need a systematic trading. Systematic trading means, I mean, like to build a system of your own rather than following someone else. Like you can easily build up using Spider. Okay, so let's get into the Spider. For example, now you already know that when we start the software, it get automatically auto update, just like you can see right now. Okay, all the files is been. Okay, and all uh, so you can see all the files are downloaded automatically, all the things are imported automatically. Okay, in a similar way, this is transformation which is going on right now. Okay, there are many things added up continuously on this. So systematic trading, basically, I will help you out to how we can make our own strategies. Okay, okay, you can build it on your own. Just you need your decide the indicators. Now indicators means you need a set of indicators which are working on a similar phase. Phase means, in the sense, if I give you an example, like if I'm using average, for say simple average, and if I'm using RSI weightage, that won't match with that phase. Okay, because RSI is a leading indicator. Simple average is a bit slower than the exponential, but if I use exponential and RSI, that will work great. But I can also use simple with MACD, like they have the similar phase, like the MACD also curves where at a very similar mode. Okay, in similar manner, if you are using averages like DIMA, you can change the parameters. You can play with the parameters actually. Okay, and find out your own comfortability zone, that no, this is where it's giving me confirmation. Okay, so and why we need the systematic is so importantly, because it's highly efficiently, because you already know the plan. Then when you need to exit, that will cut short your emotional crimes, like your greed. Many a time people enter at the right time, but they are not able to exit on the right time. Okay, because of the fear. they might they might not able to. Hello, hello. Am I audible now?
Yeah, you are audible.
Yeah. Great, great. Thank you, Nitesh, for the confirmation. Okay. So, why is highly efficient? It's highly efficient because you already know where you need to exit. Okay. What were the points, where your stop loss will trigger? What are the strategies at where your, your particularly your, your particular entry will get exited? Okay. And I'm a kind of, I like trading. Like, if I enter, okay, I have one entry strategy, then I have three exit strategy for minimal. Okay. And that is, we need to make it flexible also, because that is needed, right? We can't say a very rigid strategy which is not giving frequent trades also. I don't frequent mean trades in, I don't mean that, that it should be 2 3 trades every day. I mean is frequent trades means it should have a frequency, like a certain kind of frequency, at least 2 3 trades in a week, or 4 5 trades in a week. Okay, that's a minimal one. Okay, you can increase it, by using various kind of indicators. Okay. And systematic trading will, that is needed just because it has a calculative risk. As I told you, you already have your stop loss strategy on your place. You also have your money management strategy on your place. Okay, so basically that will help you out to exit on the right time. Okay, and you will not, you have exit strategy also, so that will help you out not to, because of the fear, not to exit on the prior basis and lose the potential profit. And basically, when you make a plan, when you make a system, entirely system, it's a system, it's a but specifically entirely a signal generation system, a system wherein you can easily make out like where to enter, where to exit. Okay, so first thing, what we need to, easily want to do, like, you need a set of paper or a diary, or where you can write down or jot down your strategy, like I'll be entering on this, I'll be exiting on this, this would be my stop loss. Okay, when you start writing up or your plan on the paper, I can guarantee you will definitely reach to that plan. Okay, many of you have heard about goal setting. All of them, they say, like, write it down the paper, write it down somewhere. It's just because when you write it down, your focus catches to that path and you can go through it. Okay, so let's get started with the spider. Okay, so see, over here it's automatically downloaded. Now I just need to connect, and that's done. Okay, one more thing I need to add is, we added automatically, but we don't have intraday. Okay, so what you need to do, you just need to download the intraday files that you need. Okay, so as well as, I'm explaining you how to download the intraday file. You just need to go to intraday, download files, intraday, and you just need to download two files. That's it. Okay, so this will hardly take few seconds. And after you download, you can directly connect to number of days of intraday that you need for your strategy. So, as you already know, yeah, there's a very, famous analyst, Michael Cowell. So Michael Cowell has always said, majority of the professional uses their, set of plan, a set of systematic trading, just like a government has a system. Government is a system. Everything has a written, uh, principles for it, right? Okay, similar way, every systematic training should have a specific principle for it. Okay, so we'll be looking at the principle, what principles we can look for, what kind of strategies we can look for. When I will, at the end of this session, I will also share one strategy, and I'll help you out how to make your own. Like, and Michael Cowell also said that, never ever argue with your trading system. Your trading system means, he means the strategic, system, or a plan of system, whatever you are, following. So our intraday is already downloaded. Now we can just click on one click, it will start reading all the data. And this is how simple it is. Okay, once you start connected, you can connect your derivative data. Okay, it's not that only this is for the live version. You can use this same features for your UAE purpose, except is in ACE we don't have intraday data except BSC one day, but you can simply load and connect your intraday and check your strategies on EOD basis. Or you can also have a facility, many people said, we don't want to test it on the live version. It will be very riskier for us. Like, we are putting our money into it. We don't want to risk our, money profile into it. So what you can do is simply, you can connect to Action Replay. Action Replay is a kind of, I can say you, a kind of recorded version of the, entire day. Okay, you just need to download it at the end of the at the end of your trading session, like 3:30. After 3:30, it comes around 3:35 or so. You can just download from download files over here intraday, and over here you'll get a D4 file formation. Okay, and it will be stayed there till late evening, like 10:30 or so, and then it's converted to D5. Over here, instead of D5, we will get D4. Okay, that's the extension needed for for the action replay. Okay, so as I told you, we connected to the intraday. Now, if I open a simple chart and I press Z for zooming it, okay, see how beautiful we have two patterns formed over here in Nifty that are harmonic patterns. Okay, soon we'll be conducting a webinar on harmonic pattern, how to trade, what are the stop loss, what are the targets, specific session on harmonic patterns, and we'll explain everything on it. Okay, so over here you have harmonic patterns. So you, by just pressing S for study, okay, by just pressing a simple alphabet S, you can easily access the study window. Okay, here is the study selection window. You can select your indicators. We have more than 80 indicators. You can check, choose as per your. Also have some formulas based, like you have spread, ratio, sum of series of data, like you can sum two values, you can subtract two values, you can multiply, you can divide. Okay, you can find the ratio out of it. Okay, and you can there are multiple multiple studies added into it, so this has been used by many of the professionals. So formula part, so if you want, you can add it for easier work. Like I'm right now, I'm adding just one averages. So I just select the averages. I like the double exponential moving average. Double exponential moving average are basically where your exponential factor gets double. Okay, so you get a bit earlier signal. So I like double exponential. So we'll add one double exponential average. Like I said, eight over here. You can select your color whichever you like. Like I selected green color. I just want single line color. Okay, here you have a facility of having two color line, like for bullishness and for the bearishness. Okay, I'm selecting single color for the analysis as per my comfortability. But if you want, you can add your colors accordingly as per your needs. Okay, so I just added. See how simple it is. Just by pressing S, I can access the study window. Just selecting, I just set the parameters, like I want 13 also. So I selected 13. Over here I selected yellow. Okay, and similar way you use the 21 as well. So if you're thinking why I'm adding 8, 13, 21 only. Okay, so there are various reasons for it. Okay, first thing is my 8 DMA, my 13 DMA, and my 21 DMA. Okay, these three DMAs are basically a set of series from Fibonacci number. Like I have took 8, 13, 21. They come consistently, a set of series. Okay, there is the importance of series. Okay, you can read you can found the importance of series by various authors. Okay, even Nissan. Okay, Nissan, the the his books, like on candlesticks, noted as the bible for technical analysis for candlestick reading. Okay, so even in his, he showed us the importance of series. Okay, so it's very important that you use some kind of series that would help you out to smoothen out your trends and help you out to find out the trends. Okay, so I am using a series of Fibonacci numbers over here, and I added 8, 13, 21. Okay, to get my exactly same, like this is tested one. Okay, so I use various kind of indicators. but I personally like RSI. Okay, because I'm using since last 5 years, so I like RSI a lot. Okay, so I find out my own parameters, like my own version of set of parameters. Like I like 5. Okay, because this is I'm looking for a short term entry, so I will go for 5 3, and I can add as 13. Okay, now I add this up. Okay, now over here you can find out it's so it's so simple strategy. Okay, it's a very simple strategy to plot, very simple strategy to understand, and a very workable as well. Okay, now I'll told you, I say I will explain you how we can use it. Okay, so over here I'll be looking for some specific kinds of trades. Like, okay, I want my conditions are, okay, now these conditions are basically formed by testing the strategy multiple times. Okay, and I personally don't like back testing, because what already happened did not necessary to happen in the future. Okay, and even if it's happening, it's not necessary that will happen in the same manner. Okay, there's always some changes attached to it. Okay, so I agree that history repeats itself, but history never repeats in the same manner how it repeats itself. Okay, how it was happened earlier, it does not repeat as the same. There's always some change attached to it. To attach to get conceive, and to help ourselves to more effective with the change, what we can do, instead of doing back testing, we can go for front testing. The further details on front testing I'll be explaining on the further part of this webinar. Okay, so stay tuned and let's continue. What are my conditions, or what kind of indications I am looking for? The first indication that I always look for is, I want the price should be closing. Okay, it's coming from the below and it's closing above all the three averages. This is my first foremost condition. Okay, this is my signal candle. Okay, look, like I'm say telling you our entire system. Okay, yeah, you can either use this entire system, or you can make your own by using simple indicators that you've been using since years. Okay, so you just need to tweak their parameters, change their parameters, and start testing it. Okay, but make sure you take, like, I have used DEMA. Okay, with DEMA I use smooth RSI. Why DEMA with RSI? Because RSI and DEMA has a similar phase. Like they move in a similar, I can say, harmony. Okay, a same phase, like a same, I can say in a similar wave. They react with the price in a similar wave. So I like their harmony, and that's the reason I selected these two indicators. Similar way, you can add your indicators and check their harmony, whether they are reacting together, whether they are not reacting together. Okay, so over here I'm not looking for crossover in RSI, nor I'm looking for a confirmation on RSI. I'll be looking an extra confirmation from the RSI, because as you all have already noticed that when you are the trading, that major of the indicators, they act very well when they are taken as a confirmation, but they do not act as well, as good as the price action. Okay, the price action is very more important. Okay, so I have taken averages just to smoothen out that price action and to find out the trades out of it. Okay, the first thing what we need to do is, okay, for example, I found this signal candle. I will note down this high. Okay, and after noting down this high, I'll look for the next confirmation candle. Okay, if that confirmation candle is giving me close above the high. Okay, now you will say, if it's already closed, we'll be entering on the third candle. No, my close above the high means I'm looking for the closure above the high. Like mean, if this is a daily candle, this is a daily candle, right? So we will look at 320, 325, and the 90-95% of the candle is already being completed, and if it's already traded above the high, as per close is decided on the half hour trading. Okay, after the last half hour trading. So if it's already traded above the high, okay, there are higher chances to be closing above the high. So at when it's already 98-99% already completed, I can take more conviction on it. Okay, so I selected this and I can enter at this point. Once I enter, Okay, now you will say when this is my entry, this is my confirmation, this is my entry. What would be my stop loss? My stop loss will be signal candle. This is my signal candle, as I told you earlier. Signal candle or pre-signal candle. Pre-signal candle is the candle just behind the signal candle, whichever has the lowest low. So over here you can easily make out that the lowest low is over here at this candle. Okay, or they are mostly at the same level. There are hardly few difference. Okay, so you can put whichever as the lowest low. For example, if this is lowest low, I will put this as my stop loss. If this is lowest low, I will put this as my stop loss. Okay, for EOD traders, those who are using EOD, what they can use is you can simply make note down the high. Look at your terminals, like you if if it's being followed, if it's above the if it's already traded above the open and the high, that means, oh, I'm seeing open and the high, because if it's traded above the open, that means it's a green candle. That is our need is. Okay, and the second thing is, if it's traded above the high at the last half an hour. Okay, as you already have a uh, or written down your high, you can easily make out if it's traded above high or not. So once you check it on a terminal, you find out that you can simply enter at the same time. Okay, so there is no difference, whether you're using EOD. Yeah, but live gives you saves your opportunity cost. Okay, basically you can watch your candle and make your decision. So definitely live is more better. Okay, so you can look at the live version and find out your call. But if you are already a user or EOD user, you can either you can update to live version, or you can just check out the the way I have told you. Okay, so over here you got better confirmation. Over here you entered. Now we saw about the entry strategy, we saw about the stop loss strategy. Now what's about the exit strategy? Okay, there are various exit strategy attached to it. Okay, I give you a simple example, like there are three exit strategy. As I told you, I like minimum three exit strategy. Okay, so the first exit strategy is whenever while entering. Okay, I forgot to add one more case in this. For while entering, you just need to check that the difference between the RSI and the RSI average should be more than one. If the difference is I mean the gap between the two lines should be more than one. You can easily subtract this two, or either we can use the use of make the use of formula. Like over here, I can use a spread. Okay, if I don't want to calculate manually, this system is so easy that we can make it automatically. Like I say RSI and RSI average. Okay, so you can easily make out what's the difference between the two these two lines over here. Okay, so over here I am getting the difference is 10. It's more than one basically. So that's my confirmation again. Okay, so once the difference start falling, okay, and it start falling and try to go beyond one. Okay, means below one. Okay, that's the point of your exit. See over here, at this point your your RSI value started going below one. Okay, now many people, this is one strategy. Many people start when the RSI start compressing itself. Okay, over here once you see the major compression is happening, you can exit at this point as well. Okay, so this is the two way using RSI we can take our exit. Second thing is you can use the series values. Okay, if the series is if you can see these three lines, if these three lines is increasing their gaps, okay, that's the point you need to take your exit. Okay, so, I mean, when this is increasing, you can stay on it. When it start turning down or it start compressing, at this level, you can make your exit. Okay, so at any point, these are the three ways of you can exit. First one was when it's compressing and going below one. Second thing, on the compression of the RSI, when you find it's majorly compressing, like it's about to being one line now. Okay, you can exit at that point also. And the third one is when the three average is starting compressing now. Okay, until unless it's widening their gaps, it's better to stay on the trend. Once it start compressing, you can exit your position. Okay, so these are the three ways you can stay onto it. Okay, so see, This is a very simple minimalistic strategy. Okay, along with that I have a workability. See, I'm not saying you, on random basis. You can see on your own, you can find out if for selling is the same, so if I use this parameter, I can easily, now you need to consider median strategy. Median strategy says like whatever series you are using. Okay, so you need to easily make out your trades, like how much long you can trades minimal, minimal in the sense how much long your trades can go for. Okay, normal probability. So normal, finding normal probability is very easy. You can just take your series, find out the median for this 8, 13, 21. This is the odd series, right? So in the odd number of 3, I can find out the median. The out of 8, 13, 21, the median is 13, right? So in the median 13, I'll take the half of 13. That will come to 6.5. So from signal candle, you can easily get 6-day trades. Okay. Like from this strategy, you can easily make 6 days trades. Now, now comes the way of confirmation, like, like a professional do. They always do confirm from their higher time frames. They never do trades on just base of one time frame. Okay, this was my, and I if I if someone would have shown you, they would have just shown you this entry point, or might give you some stop loss strategy as well. But if you can see over this is the entire system. You know where your stop loss is, you know when to exit, you know when you are entered. Okay, and you know how we can confirm also. So this is entire thing is been there, like it's entirely working as a system now. Okay, now and this you can just add one more confirmation, that you can look for weekly chart. If the weekly chart is upside, okay, and it's not below the, if the candle is not below the averages, that's the best time. You're gonna, for example, this is the, already candles are about yellow line, or you can find out the majority of close is also above with the, the averages. So that's the best point for entering for the bullish trades. This is the best time for heading for the selling trades. Okay, majorly I will look for the average 21. Okay, if anything below average 21, I will not go for trade. If anything above average 21, if the close is above average 21, DMA 21, I can go for the trade. So this is a simple, extra confirmation which will, cut off your wrong signals and confirmation. Okay, this was all about my study. Now if you want, you can make your own. Okay, it's very simple. As I told you, you can just press simple, as for study, select your strategy, select your indicators, like you want averages, you want super trend, you want VWAP, whatever you are looking for, you can go for it, and you can find out your own comfortability zone. Now I'm not saying to use this, I am saying to improve yourself. Okay, improve your own study as well. If you want, you can use this as well. This works fantastic in the intraday as well, and in the daily, weekly as well. Okay, so this is how we can, look for the strategy. Now coming back to the point, like, with Spider 5.0, I have already shown you how we can use. Okay, over here you can see, the patterns. Okay, you not just, by using technical, you can see the patterns and find out the way which no one is using. Okay, that's a very common saying in the market, like, which whatever gets commonized does not work. Okay, if I say about the 49 RSI, it's already always been, very much common right now. Okay, it's that common that one of our client, he used to say, like, he sits in BSC, he says, like, like you go downstairs, if you ask Panwala also, what do you think about the stock market, even that will say the RSI is staying somewhere near to 60. I think that will go upside. Okay, so, it's that common as the 49 RSI is that common, and that's the reason the common crossovers levels are not working. Okay, so how to find out your own unique way? You can just, like, I use the RSI. I don't look for the values. I just look for the difference between them. That's my unique way. Okay, so find out your unique way and make your own patterns or things that no one is else seeing, or if they are seeing, they are minimal. Okay, nothing, which is being used widely. Okay, so whatever is being used widely, see, I can see, tell you that divergence is yet working fine, just because it has many things, which though people don't know. Okay, that's why divergence still works. Okay, coming for the important points that you need to consider while making the strategy. First thing, it should be flexible. Now if I tell you about the flexibility of my strategy, so over here, I'll tell you about signals like, see, over here, this is not my entry point. Okay, even though it's close above. Second thing, this I can enter. This is also my signal candle. The RSI is positive. See over here, there is one red candle. So normally people will say I won't enter over here. Definitely we should not enter at this point. But making it flexible, what I will do is I can if the candle is giving me higher or higher low, so it might be happening that because of the market pressure it has to go down. Okay, so what we can do, if it's still giving you, it's still in the trend, your averages are not drooping down, your averages is still intact with the trend, and your candle is red but it's giving you higher high higher low. So if you coming such way, then you can check for the second candle, only the second, means second or third candle maximumly. Okay, means this is your second candle after signal, and this is your third candle. Okay, so you can check on either second or the third candle, whichever candle out of this is giving you close above the high of the signal candle is your entry point. Or if you can also enter over here, you can stay onto the trend until unless your trend is intact. Okay, this was just an example. Now if you're looking for trades like this also, see, you can enter over here and stay onto it for 6 7 days easily. Okay, see over here also this was a confirmation. This second candle did not give the confirmation, but it was giving you higher or higher low. So it's still trending, and the next candle is giving you about the high, about the close. Uh, Close above the high of the signal candle. So this is the confirmation. You can see how smooth it works. Okay, so this is one strategy. Okay, think about this. I have made with just experience of 7 years. Okay, many of you have experience of more than 20 years. Okay, I can see many of the clients who are already using this spider since long also, and they are into market since long. Okay, think about if they start using their own making their own strategy, then how they will they will be highly professional, because the only thing they need is building up a system, jot it down on the paper, and enter into it. Okay, so it's so simple. So let's go back to the presentation. Okay, so over here, first thing I need to make it like I need to make it flexible. Okay, I need to make it simple. Okay, simple in the sense, just like I'm not adding too much indicators. I'm adding a minimal indicators, but that are working in the similar phase. That's what my third point is, that the indicators should be working on a similar phase of indicator. Like if I'm using RSI, see, I have one chart just next to it. There is, I have used band envelope. Okay, along with the super trend, and the smooth RSI 49 of 55. So over here also, band envelope, already I have using the weightage band envelope 89, with the width of 0.80. Okay, so over here also you can find out the the indications, over here if you see the indicators working with it. Okay, so you just need to spare some time with you, and it's not too much time, just 20 minutes. That's it. Okay, just 20 minutes a day for your making your strategy, that will done it. Okay, now another point that you need to make your strategy important points, like you need to make it something unique. Okay, if you are using some other strategies also, make some your own unique points for entry and exit, because what will happen, if you know when to if you make unique, you will be better than some what major people are using it. Okay, okay, now second thing, that's the most important thing that happens when we make the strategies, that we make some tradable strategies. Okay, like if you add too much of indicators, like this happened, this happened, this happened, this happened, this happened, what will happen if you add too much of it? Okay, yeah, you will lose the opportunity to enter into market. Okay, And the last point is front testing. So I told you about front testing. I give you a brief about glitch about the front testing. What front testing is. Instead of testing backside, we'll test in front side. What you get best way of front testing is you can use paper trading. Okay, said first of after you jotted down your points on your paper, like we always do, like make a plan. And once you make your plan, what you need to do, well, you need to simply do one thing. Okay, start paper trading, like assuming that you are entering at so and so point using our technical query, you can find out signal easily. I'll be explaining in short while that how you can use this strategy, how you can make your own query very easily using spider. Okay, so and for this, making your strategy, if you have any doubts, like if for testing also, for for applying also, you can always contact me. Okay, I'll always help you out to make your strategy more workable, more convincing, and more confidently. Okay, so front testing, what will happen if you do front testing, like if you do paper trade at least for 1 or 2 weeks, you will have one, first thing, you will have your back data, tested data. Okay, second thing, okay, it will increase your, if the strategy is working, it will increase your conviction on the trades. It will increase your confidence, and increased conviction, increased confidence will lead to highly profitable actionable trades. Okay, so the I tell this as the for front testing, we can use front testing using action replay as well. If you don't have time in the live market, you can use the action replay, at you can run at the speed of 5 or 10, run your query on the side, and find out, test your your theory. Okay, so as Warren Buffett has said already, stock market is a device for transferring from money from the impatient to the patient. Like you have many ordinary traders outside, right? So they are very impatient, because of one fluctuation they would exit their positions. But if you have your written successful strategy with you, okay, you what will you will transfer from that impatient crowd the money or fund from the impatient crowd to your patient, like your professional crowds. Okay, you will add that money to yourself. Okay, so let's get into how to make a successful profit. There is, I take this as 3C formulas. Okay, this 3C formulas is basically a parameter. Have consistency. Consistency will lead to conviction, and more conviction will lead to confidence. Okay, it's not necessary that you should follow your strategy thoroughly. Okay, like this does not mean that you are continuously making losses and you are still consistently using it. No, I mean, once you tested it, you know where it's going wrong. You can improve that section. If you are doing paper trade, you know where you can make better signals, like, or you can even find out the pros and cons of the strategy. You can make it more better. Okay, so once you get it better, it will start for successful profit, what you need, the consistency. Okay, there is no way, like you won't make losses. You might make losses, but make sure your losses are small and the profits are big. Okay, and you always have a ratio of at least 3:1. Okay, you can, I'm saying about risk reward ratio, 3:1 means your profit is 3 times and your risk is 1 time. So let's take an example, like you entered into 10 trades of one rupee. Okay, and you're risking one part and the three parts as your profit on the strategy. Okay, so what will be your profit like? Okay, even your 50% works. I'm saying even your 50% probability is working. Okay, so from the 5 trades, how much you made? 5 threes of 15, right? Okay, you made 15 rupees out of it. And from the 5 trades, how much do you lose? So you lose the 5 rupees, and for one for each extra, so you lose 10 of them. So even your 50, if it's 50% workability, you are still earning 5 rupees extra out of 10. That's 50%. Okay, and as it has been always said in the market, that the returns that market gives you, nowhere else you can get it from. Okay, so This is the important thesis that you need to jot it down right away. That for being a successful earning from the market, you need a consistency. Okay, consistency does not mean you are entering each and every day. Okay, I'm not against for entering each and every day, but it's not necessary to enter each and every day. Like you need to trade every day. If it's if your strategy is not giving you signal, leave it. If it's giving you signal, definitely you can enter. Okay, if you're getting if you have made something like it's giving you every on hourly basis, it's fine. It's basically your strategy, your calls. Okay, but it's not necessary until unless you're not getting, stay disciplined to your strategy or your plan, your system. Okay, if your system says to enter, then only you enter, else don't enter. Don't go for your instincts, you know like ये शायद ऊपर चला जाएगा. Okay, the shire words add a lot more risk to your life. Okay, like I have seen many option traders. Okay, like they feel like options are easy. Like options are easy, not hard. But option, if they don't have a correct understanding of the option. Okay, option was initially made for as an hedging tool, but people started using it as an earning tool now. So it's not wrong, it's fine. But if they don't use option, that can end up into huge losses as well. Okay, it's just that the amount is small, that does not mean that will be more better. Okay, now for the tools that you need to add for doing amazing intraday. Okay, whatever your strategies, just add this four of them. Okay, will definitely make it better. Like for example, first thing is confirm with the four times happen. What here I mean to is, so if I go to if I press Control I, and if I go, I'm trading at 15 minutes per se. Okay, so 15 minutes I'm trading. So if I'm getting any signal over here, okay, in 15 minutes, so what can I do is I can simply, if I'm getting any trades in 15 minutes, for example, I got a trade over here. Okay, so what I need to do is this point of time when I'm entering, I need to check that it's workable. Yes, it's workable. What I need to do, I need to go to check with the four times. In 60 minutes, it's really saying me not to enter just because it's not about all the three averages. See, and how wonderful it works. I can show you. See, this is all about the averages. Okay, this all candles are about the averages. Like you can say this is 3rd of November, 4th and 5th of November, right? Okay, 6th of November. So if I go to 15 minutes and I check those days, see how smooth it works. So you need to confirm from the four times higher terminal voice. Basically, you are, if I say four times, that means you are following the Dow theory. As Dow said, your primary trend is involved, it's in volatile. Like, your primary trend is upside. Like, for him, primary trend is obviously monthly chart. But for, basically, if you look for the time frame like daily, weekly, monthly, they are all four times higher than each other. Like, if I say daily, if I compare with weekly, that is four times higher, in fact 5 times higher. Okay, if I say weekly with monthly, it's even 4 times higher. So implying the same strategy, like if you confirm from the 4 times higher time frame, applying the Dow theory, we can easily find out that if we check with the four times, we can find out the trend where it is. If it's in a downtrend, if you're getting a buy signal, definitely it's a big no to enter in the intraday. Second thing we can add up into this is you can use derivative summary for summarize view of the entire market. Oh yeah, I'm specifically pointing out on derivative for options for FNO. Okay, so over here, if you if this was a live market, you can easily in EOD basis also you can use action replay to find out what would happen. Okay, so even if I look for Nifty or if I go for ONGC, okay, so in ONGC, you can easily make out what is the difference between the current price moving on in the near next and far month. Okay, you can make what the loss size is. Okay, what the continuous futures looks like. Okay, what are the call put most active call puts are. You can find out by scanning from the calls from in the money to out of the money which calls are active today. You can select your expiry accordingly. Okay, this is very helpful tool for those who are into option trading. Okay, so for intraday, this tool helps a lot of you. Helps a lot. And along with that, if you are day trading with options or derivatives, you can use derivative open interest report as well. This adds plus to your to your trades, like more conviction. So see, OI, your open interest is not a standalone tool, it's an extra confirmation. Kindly understand it. Volume and OI, it's not a standalone tool, that's an extra confirmation that you can add to your trade. If if your conviction is saying your trade is if your system is saying you it's a buy, okay, now that point of time, for example, I'm using 15 minutes, I will look at 14 minutes, I find out it's a buy, so I'll just go with the first month. Okay, second month, whatever I look for, I'm looking going for future. You can select your what is price up and OIR, both is it lying in that. Okay, or you can select all and find out whether the price and OI both are increasing, that means it's a long build up. And to understand, this, we have already provided you LB, SC, SB, LU. LB means long build up. That is short covering. Okay, this is short build up, long unwinding. Okay, means long is about to build now. Okay, unwinding means short covering means whatever has been entered over here, people are started in this condition. You will find out majorly the profit booking part, because if the price is increasing, OI is decreasing, definitely people are cut offing or we are booking their profits at the high price. Okay, so these are the two important tools that you can use, or you can also use the market summary. Okay, now you need to decide it what you need to use, what is suitable to you. Okay, if you are an intraday trader, this things would help you definitely. See over here, if you find out, you will easily find out all the stocks who are the best, worst in the live market, who made the new high, new low. Okay, so if you click on top trade, you will easily make out if the top traded are more of negative or selling side, you can easily find out at the what where the market floor is. Okay, so or you can do is best and worst. If you find lesser script in best and more script in best, you can easily make out the major of the market is on downside. So these are the ways you can make out the trend analysis. And we can use technical query to build advanced live queries, live scanner as per your strategy on your fingertips. Okay, what you need to do, you can simply make your strategy and at a easier way. You just need to go to query, go to technical query, click over here, you will find out. See, I made this for the band envelope that you're already seeing on the previous slide. Okay, on the previous slide we saw about the band envelope, right? This is band envelope theory, right? Over here, I have made the query for this. See how simply I made it. See, I just added the band envelope. Okay, I wanted the close should be above whatever condition I needed. That was already there. Okay, and regarding this technical query, it's really very logical and very simple. What all you need is to understand the logic behind it. Okay, what this condition would give you the results of. Okay, so for this you can call us for or we'll be making another session, similar webinar session where we will explaining how to build your query in more simpler manner. Okay, and along with that we'll see about the harmonic patterns. So basically we can make if we get good numbers of leads, we will definitely looking for another webinar on the same, like on the harmonic patterns and how to make a technical query. Okay, so let's get in further, like the you can also use the indices to know the market flow. Okay, over here in this point, I meant to do about this all indices. So if you find out basically if you are looking for one sector, like if you are right now have trade in pharma, and you found your Nifty pharma is negative or turning negative over here, so probably that will be the point you can you can probably look for exit. Okay, so check with the indicators, check with this, you'll able to find out from their indices for whether the on which side the flow is. Okay, and one important tip, okay, one very much important you can say very important tip is you need to go with the flow of the market. If the market is upside, go with only for buying. Okay, there might be some sell strategies, but okay, majority when the market flow is up, stocks tends to place on the same line. It's just like you're swimming in the river. Okay, if you're swimming in the river, if you go in the same direction of the flow, what will happen? You can easily swim and you can reach your destination more faster. But if you try to swim in the opposite direction of the river, what will happen? It will take a lot of energy of yours, first thing, and second thing, it will take a longer time to reach at the destination. It's not possible. Many times you might even not even reach your destination. Okay, so yeah, this is very 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 important. Like this is my favorite favorite quote from William O'Neill, that whatever seems too high and risky to the majority generally goes higher. Okay, and what seems slow and cheap to generally goes lower. Okay, so like people majority, I can give you the simple example of the current scenario of Nifty. Okay, at the lower levels there were many signals generated. Okay, in Nifty, if I say about the daily chart, okay, so at this lower levels there are many signal has been generated, many of them. Okay, but people were afraid, whether it will go, it's a risky trade, whether it will go higher or not. Okay, and here that's the major reason people didn't enter even at this point. Okay, people tend that it might not go up. Okay, so that's a major call, like so my call is don't follow the crowd but follow the flow. Don't just understand this line very carefully. Don't follow the crowd but follow the flow. Okay, so I mean to say the flow of the money, or you can say the flow of the price action. Okay, just follow the flow of the price action, but don't follow the the people sayings, like whenever the people say that it will go negative, like people say इस बार मोदी नहीं जीतेगा, and the next day you'll see Modi is winning the game. That's a a bit of humor to attach to it. Okay, so yeah, in similar way, the people, what people say does not work always. Okay, that's a majorly seen. Like there are many people who are already many qualified people already giving calls on the TV. Okay, and you find out that majority of them doesn't work. That call does not working. Do you know the reason behind it? The reason behind it, that is being broadcasted live to millions of people all together. And I'm not saying all millionaire will enter. I'm saying even in lakhs, if they people are entering. I'm saying even in thousands, like 40,000 people even entered. Okay, there are many people who can take benefit out of it. When they see volumes spike, they will start. If I have a huge money, I can simply invest at that point. When I see a volume spike, I will sell that for a huge quantity, and once it starts falling because of huge quantity, there would be a selling impact, and we're seeing that the stop loss would get triggered of the many of the retail retail customers. And what will happen of the retail clients would get exited from it, and because if the retail client would exit, there would be a small minute panic created, and you can see that is what happening. Okay, this minute panic is of the reason of that, because there is not only bulls are there are bears also in the market. So what bears will do, they will do the take benefit of this high volume. See, you can see the high volumes over here. At this high volume, what they will start selling a huge quantity. Okay, a very huge quantity. Okay, once they start selling huge quantity, if they're getting a small amount with that huge quantity, that's a big amount. Okay, so this what happens. So that's the reason you need to make your strategy flexible. So I won't take your much time now. It's I know it's already we started late. We just have few minutes. I'll just go through this few of the slides. Okay, this is another quote from Mr. Famous inventor of elder pulse indicator, Mr. Alexander Elder. Okay, and this is he invented his own indicators, elder. Okay, there's the elder wave also. Okay, so in this, he says that the goal of the successful trader is to make the best trades. Money is secondary. Okay, I'm being into Banya community. Okay, for me my money is more important. Okay, so my college unit to first, my first priority is capital protection. Okay, earning from is my secondary. When you make this as your life goal, like first thing is as your capital protection and secondary is your money, then definitely you will make a better strategy. Okay, because you are investing your hard earned money, and you don't want it to lose it so easily. Okay, so this is how we are my call was all about how you can build your own system. Okay, and using your own system you can definitely earn it. Just make sure you are using right set of indicators. Okay, for any further assistance on this specific topic, you can kindly contact us on the numbers given below. You can jot it down. Okay, this last number is my number. This 8452059828, and this is our contact details. Okay, you can also write us at on our mail ID like utsav@spidersoftwareindia.com and at the support@spidersoftwareindia.com. So we will be more than happy to see your words on this, and we'll be more than happy to serve you the best what we have. Okay, so thank you so much for keeping your sparing your time from this festive season. Okay, and yeah, this is here we are ending up the session.